What's going on, guys? How's everybody doing? What's going on? What's going on? Just give me a second. Can you guys hear me clearly? Make some sound adjustments. Got the chat. Give everyone a minute. First things first, just give me a sound check. And then we'll get it started. How's everybody doing? How's everybody's weekend? Whether you celebrate Easter or not. Audio bad? What's it sound like? Sound is okay? Alright, cool. Okay. What's going on, guys? Thank you for tuning into the BlockRoots YouTube channel. On behalf of myself and my partner, Josh Rager, I want to thank you guys. Obviously, if you're not already a subscriber, go ahead and click the subscribe button. Go ahead and hit the like button below. Airy audio. Well, I don't know what to do about that. I have having some trouble with my OBS as always. Everyone's weekend was good though. I had a good weekend. I didn't take too many trades, honestly. I can't remember if I even took. I don't even remember how many trades I took throughout the entire weekend, but I want to say that it was under 5. A bit echoey. Is it echoey for everybody? Just want to make sure that I want to see if I can fix this before. Oh, okay, all right. Yeah, you know, the weekends are kind of garbage. I think that as the market matures, that it's going to take more of. Does sound a bit rough. Give me 1 sec. Let me know if this sounds good. I'm going to change something real quick. Does this sound any different? How does this sound? Sound is a little echoey. I just changed something. Sound is good. Bit of a distortion. I just changed something, so just let me know if that sounds a little bit better. Yeah, a bit? I guess we'll have to roll like this. Better. Okay. I don't know what's going on. Like my OBS has always been trouble for me. I have a mic option and then a desktop audio option. I don't know. I can't figure it out, dude. All right, so I guess you'll have to turn your volume up a little bit because I'm not a sound engineer whatsoever. All right, guys, what's going on? Hopefully everyone is doing, it is too low. This is far better. All right, so some of you barely hear you. Lower in volume. So are you guys able to turn your volume up a little bit, or am I going to have to go back to the last one? What do we prefer, this or the last? I want to end this. Quieter but more pleasant. The latter or the former? We keeping it this way, or are we going back to the echoey way? Or the rougher, more distorted sound? Yeah, good? Okay. All right, cool. That aside, yeah. Honestly, weekends are, you know, as Susu said, it's almost like the weekends are, you want to fade the weekends. And I think that you don't just want to, you know, I think what he was saying is you want to fade the weekends, the weekend directional move, but I think that you can honestly just fade the weekend, meaning like fade the market as a whole. I don't mean fade as in when we say fade in a technical sense, usually it's like, you know, if the market's moving up, fading the market would be fading the direction of the mood. So taking not the mood, the move. Well, both, right? Taking a counter trend move against what the current trend is. So if the market's moving down on the weekend, you know, fading the market on the weekend would be, you know, getting long Monday. So whatever the weekend did, just kind of go against that. But I think like lately, and maybe it's because it was wrap up of the first quarter, and you know, this is the beginning of the second quarter, and it's a holiday weekend. It's just the weekend activity is just sparse, right? There's not a whole lot that goes on, and you know, I've featured this before. So as a reminder, guys, you know, this stream we are sponsored by Phemex. So Phemex. So we are partners with Phemex. They have a contract spot and yield generating program. But I also we've been working more closely with the guys at Genesis Vol. So let me get this out of the way. And I feature this platform a lot. And make sure the sound didn't change when I did that. Okay. I feature this platform a lot, and I shared this on Twitter today, the implied volatility being floored, and how I think that means that we're clearly not at a top, because volatility is so low, and we're only less than we're 4% off the all-time high, and volatility is volatility is flatlined. You'd have to go back all the way to, let's see, historical activity. Go back to I think last year. So let's look at implied volatility and go all the way back to, this is the lowest it's been in this calendar year. So I think if you go back anywhere between November to December, implied volatility was more elevated than where we are, but this is by far the lowest. So I think that clearly we haven't put in we haven't seen the high yet. So in terms of the all-time high, so I'm not really worried about that. But another good thing to use on this platform, and this is just relevant to what I was talking about, right? I like to feature this platform on period, right, on the streams, but let's go to realized vol. Weekends are kind of garbage, right? So let's go back to the beginning of the quarter. So just look at this on a quarterly basis. So beginning of the quarter, January 1st to where we currently are now. So we're looking at April 5th. And just look at the weekends, right? So realized volatility on the weekends is lowest. So Saturday is actually the lowest. Sunday picks up. I think it might pick up on Sunday because part of Sunday is the Legacy Open for futures and CME Open for futures for BTC. But lower volume, which means that there's less people actually trading, and there's probably going to be less friction in the way of any kind of movement. So it's going to be a thinner environment. The weekends are a better time for anyone really to push the market around. So on weekends in traditional markets, it has been a thing where you could push around the futures market on the weekend. You could push around the Forex, not on the weekend for futures on Saturday, but with foreign exchange, for example, the market it's been known to be pushed around on the weekends to hunt out liquidity, right? To hunt out stops. So whether it's big investment banks, not to get into central banks, but that the market is pushed around on the weekend because of this, right? Because there's less in the way of it. There's less people trading. So good time to hunt stops, which might be all that might get into the earlier point about fading the weekend activity. If the trend has been intact for the week and you're moving up into the weekend, and then the weekend is counter trend what the week was up to that, weekend we have a pullback, well, it's easier to push the market around on the weekend, so maybe they're hunting stops before resuming the trend in the weekdays. So yeah, all right, so let's take a look at a few things. I think obviously BTC, I think that this is a strong move. We saw a good amount of absorption at the low. We're going to look at BTC. We're going to look at BNB, Alpha, which just had an ugly pullback. For what the advance was this morning, it just kind of gave it all up. Algo, GRT, LTC, REN, which my buddy Matt put on or put in front of me this morning. DOT, Sol, and XRP, go figure. So XRP is going to be one that's fun to go over for me because I've shitted on XRP for so long. From a fundamental standpoint, I just, as I've said many times before, like if the technicals are there, I'm going to trade it. I would trade anything. If it moves, I would trade it. If it's liquid, if there's a decent spread, I'll trade it. Doesn't matter what it is. I've been before getting into that, I think last week or 2 weeks ago, I talked about how I signed up for Delphi. I really like Delphi, but I actually canceled my Delphi membership. I don't work with Messari whatsoever, but I am going to be upgrading to the Messari Enterprise. So I'm a Messari Pro member right now. So for those of you that were asking last time, hey, how's the Delphi subscription? Delphi Institutional, it's like $500 a month, which is, very expensive. But if you're doing this full time, it's kind of something you have to incorporate. I used Bloomberg before, and Bloomberg, I think that this is the closest thing you're going to get to a Bloomberg terminal in crypto. Not only does this have the intel, and again, this is not a solicitation. I am not, shilling this whatsoever. I don't work with them. I just think it's a better platform for technicals, for intel, for analyst reports, And then one other thing, like when I wake up in the morning and I want to look at the market and I want to see what I missed out on. I want to see where skate where the puck is going. So I want to see where the attention is and sort of what is performing best, or where the movement is, relative increase in volume, right? Relative increase in attention, all of that. This breaks it down, I think, in a really clean manner. So, for example, you take a look at Masari and you could see right away that in the last 24 hours, the leaders are Web3 platforms and then centralized exchanges, so exchange tokens. So you could see kind of where the attention is, I would say, and I think that this is just a good thing every morning you should have something that if you're not just trading one asset and you're kind of looking at crypto as a whole, sort of like how stock traders will use some type of screener to, filter out where some of the opportunities are, where the relative increase in volume is, right? And they'll have a bunch of different parameters. It might be relative increase in volume by 3x. It might be, back above its 50-period moving average. It might have different settings. I like to arrive to something in the morning that gives me an idea of where the activity is, and I think that this is better. I found Delphi to be like kind of sporadic with their posts, and it more or less came across as, and I've heard this before. Delphi is kind of like a hedge fund that is front facing as a research platform. So what you're getting is all the research that they're putting in to their investments. So it's I think that this is a superior product for what I'm looking for as a technical based trader, which is not to be confused with a trader who just uses technical analysis, but as a technical trader rather than just purely interested in the fundamentals. Even though I think that if you've had an edge, if you've had an idea of what fundamentals are with certain projects, you've definitely had an edge. Okay, so let's take a look at BTC first. So one thing that I pointed out last night, and this looks much better actually. I have a vertical screen now to my left, which is about 24 inches high. So it looks a lot less compressed. But one thing I was pointing out last night was from in this pullback, right? So this is today's open. This is the low of the day. And into this pullback, we actually had a significant sign of absorption. Now, most of the activity, most of the downward pressure, so into this low right over here. So today's open, right? We had this rotation downward and a nice little V-shaped recovery outside of that. So one area that we have to focus on is this 58, 59 level, which was, more or less the value area low of this range, right? The prior low of this range, where most of the activity had more or less about face and turned before rotating back up. First technical retest of resistance before putting in this low, first retest. Right, so you have the open of today, testing these lows again, and before this recovery, at the lows, there was a sign of absorption, right? So there was a sign that there was maybe, I just describe it as, an eagerness on the derivative platforms, such as BitMEX and Bybit in particular, to get short. So what we're seeing is an aggressiveness in the CVD, skewed to the right, right? So from left to right, you're seeing that there's a lower low. And again, the cumulative volume deltas are running total of those deltas, right? So positive and negative deltas. And meanwhile, price action is doing what, right? Price action has actually put in a higher low. So really, it's just it's a matter of, it's a very simple concept. It's, there's a certain amount of selling over here. From the left to right translation of this structure, there's actually more selling overall. But for that increase in selling activity from the left to the right, we've actually had a higher low that's put in. So what you can imagine is, for the CVD, you could think about it as showing you more or less what the level of liquidity is, right? Where it's thin, where it's thick. When the CVD moves minimally and price moves a lot, it shows you where there's a lot of less liquidity. When the CVD is moving a lot, in this case, if we're going to be focusing on a lower low, right? Lows, for example. When the CVD moves more and price doesn't, it shows you an increase in thickness, right? And we attribute that thickness to what? We attribute that to buyer interest, right? The bid firming up, right? Less advanced by sellers. So more work put in, but less advanced. So while that's occurring, it's not like we had, one thing you would want to see is, hey, are those just, are these traders getting caught off sides? Because one thing is, yeah, from left to right, you have a higher low. And yes, on derivative platforms, you have a lower low in CVD. So we know that means that the aggressiveness is there and that the bid is staying put. But what we want to see also is that these are new positions, right? So this lower low in CVD is not just from longs being stopped out. It's not just from longs closing out, but it's potentially from shorts opening up. So a combination, when you're on a derivative platform, you have two forms of sellers. You have a seller to open and a seller to close. So when we look at open interest, over the course of that structure, right, in that left to right translation from this low up to these highs and back down to this low, you actually had open interest that stayed relatively the same. So it's not like we saw this drop precipitously, right? In which case we'd say, all right, there's absorption there, but it's not absorption and someone getting caught off sides. So you could say that since it stayed relatively the same, and it slightly increased towards the right, that especially when we're focusing at left at these 2 points, that there was maybe an increase in short activity. And one thing to notice as well is that while this is occurring, and when I'm looking at CVD, it's more with regards to swing positions. So I don't look at the CVD on this time frame, on the 15-minute across a structure for longer term swing play. It's very much relegated to the time frame I'm looking at it on. So if I'm looking at maybe a intraday momentum play that's a little bit longer than a scalp, then I could build a position off of this. But I feel like sometimes people are uncertain about how you use CVD, what time frame it applies to. It applies to what time frame you're looking at it on. So if you're looking at a 4-hour CVD divergence, rather a 4-hour chart, and there's a massive divergence, then that's going to have a larger impact, a more lasting move than if you're looking at a 15-minute. But this also, when looking at this compared to, so this is the CVD on the futures exchange, right? This is coin margin contracts compared to the spot exchanges. And what you see in spot exchanges, and this is even better, I think, and these are times when you see the funding drop, when you see funding reset, is on the spot exchanges, even though there's actually one less seller, right? So the only seller on a spot exchange is to close out. It's always going to be a little bit more skewed to the upside. At least this doesn't even make, right? This is pretty much even, all right? So this is more or less even, whereas price action, again, it's slightly above even, right? But it has a higher low, but it's not showing the same level of extreme activity on the futures exchange. So spot, it's not like we saw, and you wouldn't want to see this. This would be more of a sign that you would want to, guard against and make sure you don't see. You didn't see like a pickup in aggressiveness as the structure rotated, right? As we opened today and rotated into this low, it's not like you saw really any kind of pickup in activity. Another thing to point out, and these are just more things with regard to the higher time frame. So I'm going to get rid of this. I'm going to have to put this back on when I switch over. So leave the open interest on. Now, if we look at the structure on the higher time frame, just one thing that's another positive. Open interest is back at the highs. Okay. So open interest is back. This is Bybit's funding rate specifically, so I'll get off of that. Open interest is back at the highs. Okay, so we have open interest back at the highs. Price is not broken above that 60K level, and I'm going to get this in a second. We bust out the chart. I think 60K is the key contextual level right now. Very obvious large number, big psychological number, and it's kind of more or less where we've done most of the business before, having to turn away from. Now, open interest is back at the highs, but funding is not it's not through the roof again. So I would be concerned if funding was, again, back up towards its, this is aggregated, so it's over 1 is a high value, but I should have left the Bybit one up, so 1 second. Bybit is actually kind of, I like to go off of Bybit when it comes to judging the level of degeneracy in the market, where, when Bybit starts getting above 20 basis points, that's when I'm like, there's no way we're going to be putting in continued price action from here to the upside. It's just way too much leverage into the system. So the good thing that I pay attention to is the fact that, or the good thing that I'm seeing, excuse me, is that Bybit apes are not really getting overly aggressive over here. And I think it's constantly them that we have to clean up. Bybit is it's one of the leading exchanges, top 5 by volume, by open interest. So when we see that Bybit is really, it is committing in terms of excess leverage, it's very rare that you're going to see price continue for a really long period of time. And another thing is, especially the case, if we're returning back to a previous all-time high and we're up there in terms of open interest as well, and funding is, again, extremely elevated, that's not going to be the move that takes you through the all-time high. It's very unlikely. What's more than likely the case, and you just have to think about that in terms of absorption too. If you're at an all-time high, right? So if we're at this level again and funding is somewhere back up here, it's already showing you that you're not, one, we're still under this, right? We're still under the level. Funding is now showing signs of total commitment, and price has not shown signs of total advance. So the fact that, we're still low in funding, but we're kind of back all the way up here, I think is a really good thing, because what it's showing you is that, hey, maybe we've washed a good amount of that degeneracy out. Maybe we're having a little bit more of maybe the signs of patience by these participants. And if anything, I think that if we're above 60K, I think at this point, if we're above 60K, that we're good. But the fact that we're back up at these highs again and open interest is up, but funding is low, I think it's even better. So if let's say hypothetically we were here, we're not above 60K, open interest is slightly higher, right? We're above a previous open interest and funding is through the roof, then I'd be like, guys, this probably has a lot more sorting out that it needs to do. You have a lot of commitment here. The market hasn't broken to new highs, and it just is. When you have, and this will be a lesson about Archegos too and Bill Huang. When you're using a lot of leverage, time is really important. So you have to think of it as it's super path dependent. So for example, if you're using a lot of leverage, you really can't have the market go too many ways against you. It's really important that if you're using anywhere above, I shudder to say, because I can't remember the max amount of leverage I've used besides the Phemex competition. But personal leverage, I don't think that my leverage ever exceeds maybe 2x, I want to say. It could be slightly more if I'm really going for it, but a lot of times I'm just using my leverage to mitigate counterparty risk, right, to reflect my off-exchange balances. But when you're using 10x and it's on your portfolio and you're using, even if it's not, right, if it's just to mitigate counterparty risk and you're getting exposure for that off-exchange amount, if you're using high leverage, it's really important that the market doesn't move against you, right? If you're using 20x leverage, you can't have the market move more than 5% against you. So it's super path dependent. So when we see that leverage is not being overly employed and the market is at highs, I think it's more of a sign that maybe we're almost there. And again, how I started this when I was talking about Genesis Vol, one of the signs that makes me really bullish is that implied volatility is so low. We are essentially one standard deviation away. Let's see. It's just one sec. Where are we? Just historical activity. We are probably one standard deviation away from, at this point, I want to say 70K. Where are we? Forgetting where it is. I'm about to ditch it in a second. Maybe they changed it around. Either way, implied volatility is extremely low, and we're less than 5% off the highs. So let's take a look at BTC now, because I couldn't find that chart. But we're less than 5% off the highs right now, and implied volatility and realized volatility is extremely low. So the idea is things are really compressing, and normally at a high, what you have is a huge amount of volatility. You have spreads that are just blown out. You have a market that gets really thin, and ultimately someone has done the first massive amount of their profit taking. So taking a look at BTC right now, we see, I think the most obvious thing is right now, the most important level on this chart, the highest weekly close, we're knocking right there right now. So it's not like, previous regimes, I would say, if you lost a weekly level, close back through a weekly level like this, and I have some of my daily levels on here, so it's going to muddy it up. So I'll just change the color of this. I'll change the thickness just for a second. So this weekly level right here, we managed to close back below that. And a lot of the times in previous market regimes and any other conditions, this might have been good for a bit more selling, because it looks like, the market is suddenly, it's just definitely a lower high in the making, right? And temporarily we were actually back below this other weekly level, which was around 57.5. So the fact that we're still hanging out around here, just makes me even more bullish. And at first, I was looking into the weekly close and looking at how the daily was closing the other day, and I'm thinking, well, this could lead to a much bigger move, but that has worked in the past, but it's not so much the case anymore. So this weekly level, it's been messed around with a bit, but I don't think that is a level. I think that the level really is. I think it's the 60K level. And I'm putting emphasis on that as if it's, somewhat abnormal, because the daily highest levels is above that, right? The daily highest level is at, if we're looking at Coinbase, daily highest level is 61,788, and the daily highest close is, 61,181. So I don't think that the market actually needs to come up there to really validate confirmation in terms of a move much further upward. What I honestly think is that what happens over here is that when, and remember this is when, so it's not in the making right now. Obviously, it's after we break 60K. If we break 60K and we're able to hold above that, I think it's very clear right now to all market participants that for all the struggle that we've gone through previously, this is clearly a change in structure, right? Change in structure, pretty important contextual level for the last month and a half. And then I don't think that you get a really significant chance, or I don't think you get a significant amount of time, put it that way, to take advantage of this move. I think that what you end up with is a move that, like many others, ends up really putting in an extended candle through the high. So, in the past, you would say something like, well, the daily level is, 61,181. I'm waiting for my daily candle close through this level. And a lot of times what we see is, you don't get sort of the luxury of that convenient retest and nice smooth move. What you do get is like a really extended move that, flags up at 62, 63, and you're thinking, well, I have to kind of shit or get off the pot right now. Is this going to fly upward, or is this the one before nukes? And, some people get rewarded, some people bet against it, and that's usually why it moves up more. But you don't get that retest all the way back down to the previous structure. So I think 60K is that inflection point. If we look at this from the higher time frame and we sort of look at how this has transpired over the last couple of weeks, we're still within a range, right? So I pointed out on XO, or I pointed this out on Sierra because it's a lot easier. On XO, they don't have the weekly candles, I believe, so it's a fucking pain in the ass. But what we've been, if we're looking at just this alone, we've been stuck within a weekly range from a weekly, on the weekly, it's clear that even though there's been a good amount of dispersion, they're talking about like 20% too, which is high, but it's a 20% range, right? We've had lower time frame trends within here, but the high is pretty much relatively intact. It has been for a while. Even if we went back to the original high before this, it's not like we've done much to get away from that. So still within a range, more or less a rising wedge, though, whatever you want to call it. I'm not one of those price action patterns encyclopedia Bukowski guys who I think it's the Bukowski encyclopedia that knows all of them offhand. But what this is just a compression of volatility. So let's go to a different chart, because this is just going to get ugly with all the other lines, and I'm going to go to those in a second. But what you have is, this is a compression of volatility. Right, you're seeing this very obviously. The price action, whether you do it like this, whether you're drawing it like this, it doesn't matter. What you're seeing is that you have a great degree of dispersion in the beginning, and then you're having this sort of workout over time and tighten up. And in a bull market, a tightening pattern like this, you're going to bet on continuation, right? As long as you don't have any kind of catastrophic failure with regards to market structure. And even though, we have a great degree of dispersion, it's not convenient, because in terms of setting stops, if you're going off of the weekly or daily levels, you'd have to really, if you're doing it right, your position, incorporating the right distance from the daily level would be pretty damn far for that stop. A major change in market structure, honestly, is now we have this weekly level right here. So weekly high or low technically right here. Let's get the magnet on. So weekly highest, high or low from a closing standpoint at 55,777, and on the daily, all the way back down here, your daily swing low at 51,293. So price can come back anywhere between these two levels, and still, it might give us a run for our money in terms of emotions, but it might run you through the emotional gamut. But until it breaks, I would say the daily level, right? Because weeklies, you chop around a weekly level plenty of times, but it's not necessarily leading, again, like I said, to the same sort of results that we've seen in the past. But if you start losing daily structure, if we're starting to do something where not only we lose daily structure, but you're also starting to violate what is kind of an obvious funnel that price is moving within. Again, I said you could draw it subjectively, but you still more or less see that, hey, this lower trend line, it is all we have now, right? It's what we have to go off of if we're drawing a diagonal. if we start doing something where we're falling, below this level and approaching this daily level, then, maybe we could start looking to lower targets around 49, 48, 45. But until then, it's a pain in the ass, highly volatile, really strong trending asset, which means it's going to have, it's a reason why we like to trade BTC, because it has a really high ATR, and it doesn't just cleanly trend the entire time. It puts in these really long consolidations where you have to constantly just, if you don't have a system, you're going to be overthinking it. And, even with a system, you overthink it, myself even included. The other day before we were going into the weekly close, I was thinking, well, how's this? I'm starting to think like I even posted about it on Twitter. I said, how does everybody feel about changing market structure? Like get a feed on, or take a temperature on the emotion and the sentiment in the market if we're going to lose that weekly level. And, once you lose it, there is no follow through. Market is showing a bid this morning. Everything looks decent. It just looks like a choppy, pain in the ass market. So on the lower time frames, and again, just to wrap up higher time frames, I'd say key levels, your 60K level. I wouldn't just go blindly longing off of this weekly. You get a daily close above this. The significance of a daily close through this weekly level now is actually, I should actually give this a little bit more respect. This weekly level, so to clarify, I think 60K is the balls to the wall level. But this weekly level right here, so weekly highest close, it's actually more recently the daily swing, right? The high of these closes up here. So where we've had a good degree of trouble in this lower rotation back up towards this high, this is the highest close from this more recent rotation up. So from low to high, this is the highest close. And you could also see that it coincides with this high back here. So a daily high, right? Or rather, excuse me, a daily close through this 59 level. That would be the first time we've done it, in over, we're going on 3 weeks now. So I guess you could say that would be a significant sign of advance. And what happens when we break 60K? Well, it obviously implies we've broken above this level. So there might be a cause for, what I like to try to do is give the simplest levels of confirmation, or where I think is, broadly speaking, the most applicable to all traders, I'll say, because you could probably have an edge by looking at on the lower time frame if you're breaking above 59, right? After a daily close above 59, let's just say hypothetically we get a daily close above this level. Some of us are going to be able to look at it on the lower time frames and see the signs of, hey, what's the likelihood now that this is going to break back below? Or, now that we've had a daily close, my next target is 59,650. Is 60 at that point a gimme, right? But for just higher time frame traders, I think that 60K is probably a really reasonable level to go off of. And then from there, the daily high or low right now locally is at this weekly level. So that weekly level around 50, the daily high or low right here is 57. But I think more importantly, the most important one is down here. So and to clarify what that means, if we lost this daily high or low, I just think, hey, we're still back within, we're still within a range. I wouldn't say that anything major changes. When I say major levels, I'm talking when we break 60K, I think that leads to a much bigger move. And I think that if you break this low down here, I think that could lead to a pretty big move as well. Whereas with this, if I say, this is the daily low and, you don't want to lose that level, well, what does that mean? Where are we coming from there? You could lose that level at 57 and it could mean that we're just coming back down to, I don't know, let's look at some levels between where we sit right now. We have, just in terms of the last daily 2 rotations, we have a pretty meaty area around, wait 1 second, we put the daily level on. So daily level is, okay, that's at, daily open. If we're looking at below today's daily open, right through this daily level, where else might we find support? Well, we have a naked point of control right around here, around 53. If we look at this from this standpoint, excuse me, 1 sec, I was on the right chart, zoom out a little bit. You have a good amount of meat down here before that even. So these previous lows, interaction, flip. So even before, before that naked point of control around 53, it's right around 53.4. You might find support between 54.5 and that level. So it's not like that it's not necessarily the case that might lead to a tremendous follow through. or be any reason to get overly bearish. Lower time frames, really quickly. Again, open today, move into the low, absorption down here at the low, but at this high right now, we are starting to see signs that, you know, market's getting a little bullish, maybe a little bit crowded into here. We have had a little bit of correction into these single prints, which I did have marked off, and that would have been a good area to bid. Now it's already been, you know, it has been returned to. One thing to focus on with how this day transpired is that in a trending day, you want to see the volume shift up. So this is good. The fact that we have the value area favoring the top side of the structure now. But one thing to focus on is that most of the volume now is coming in at the high. And what you want to do is now see that you're able to maintain above this point of control, right? So if this is a trending day, meaning, you know, bang, 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 volume, single prints, bang, 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 you want to see that for all the volume that continues to come in, that you're sitting above it. You know, in terms of where the risk is being put on, you want to see that you're sitting above that. If we look at EXO, for example, you know, we could see that earlier into the move, you did see a good amount of selling, but the market wasn't able to hold that up. I would like to see that in a strong trending move, that when you have your first bit of selling as the market is moving up, the price is standing in front of it and is not being rejected. Not only that, but you had pretty one-sided activity at the high, more one-sided activity at the high. So it is, you know, it's the market right now, I think as we go higher up, I think over time, much higher prices lead to less volatility. But as we're moving higher up in the interim, I think you're just getting people that are, you know, they've learned the lesson from the last time, longing a little bit too early, but now it looks really good and they're going to stomp on it again. And you constantly have to work these positions out where they get caught off sides and, you know, you have a little bit of a flush. But so far the market's recovering, right? So into this correction, into these single prints. So what I was looking at earlier, was the Coinbase single prints, and here are the Bybit single prints, which excuse me, now I'll just open this up. I think I could actually put the candles on, one sec. So we've returned back down to this imbalance area, so where that single print level was. And you've seen actually that that level was sold pretty heavily. So sold very heavily, right? Very heavy selling, and in a matter of 2 rotations, and this is using a trend reversal chart, so it's a higher time, it's sort of like a higher time frame setting for a trend reversal chart, but it's just a higher range setting. But I like to say higher time frame because it's usually going to incorporate more time between these structures. Good amount of selling at the low, and market has not only recovered, but as it's moving up, again, most of the volume coming in below, right? So we're able to, or consider it like this, for the recovery out of this low, the initial selling that keeps trying to cap it, we're trading above, we're able to maintain above those levels. So just to give you a really good example in the short term, while this is still here, I like seeing this. So when you have selling that comes in, if I see a good amount of selling come in like that, and it's new positions to open, so you could have seen this show up on Agri-Trade. When you have this come in and the market is staying bid right here, the longer that this stays bid and doesn't flush out, the more I expect this to just pop up hard. And especially since we have a good amount of this volume down here as well. It's just showing you that for the pressure that everyone's throwing, you know, their seller, everyone's throwing, the sellers are throwing orders at this right now, and it's not backing away, right? Whereas earlier in the structure, you know, just using this for example, and this didn't help when you had these trapped up here. You know, you had the market that stood here for a second to absorb those 4 million contracts, and then the only amount of selling that came in after that was able to drag us down was very minimal compared to that, right? So you could look at maybe the total amount of volume from here to here is less than this 4.6 million contracts. Now, not for nothing, those are trapped up above, so unwinding that, you know, certainly helps, even though that's incorporated into that very likely. So it does look like I think we're going to get a move up to, in the short term, I would say that my target, now that we've had this retest, so now that we've had this pullback, and this does look healthy right now, and this is kind of hanging out around a key contextual level, so it's at weekly and daily level. I think that it's in the near future, I think that we're going to come back up to this 59,600 level. And what this is essentially, if we zoom out, so I'll go to a cleaner chart now. So we're just going to take off these sessions. So again, move is good now. Most of the value has been shifted towards the upside. We want to hang above that point of control. Turn that off. Didn't mean to turn that on. looking at the composite, so where we're kind of dealing with right now, so the level that we're having trouble at, the last level we had rolled from, and this was a roll. So it wasn't, again, it wasn't a major rejection up here, but it was a roll. And I was wondering, if we were going to roll even more, because, rolling when you're crowded with derivatives contracts is usually something that would result in a big flush. So funding was very high. So if you don't remember that, let's go to, where is it? Indicators, fixed range. I would normally pull up either Quant Tower to do this, but I think it's easier for you guys if I just focus on a few platforms you have access to. All right, so anchor. So really, this prior range over here, what we're looking at is we're reaccepted in this range. So back in the value area low, so kind of a nice retest around that area, right? So reaccepted back within here. Now, what I'm going to be looking to, what I expect to occur, excuse me, is that we are going to be testing the value area high of this prior composite. And I think that in this case, if you're going to say, what do you bet on? I think that when you have a market that rolls over like this, in the current context and conditions we are in, that this is more likely to overthrow what is the clean line, right? So the clean line's right around 595. But I think that, targets are probably somewhere at these highs. So 596, 597. So that is contingent upon holding this level now. And just as a reminder, there's been many times where this transition back within a range occurs very quickly. And then there's also many times where those who are patient get rewarded, right? So you say, okay, so this is a range that we are reaccepted within, very friendly range for buyers and sellers. Value had been established there for a series of around 7 days, 6-7 days. And I expect sort of the same rotational mean reversion activity, not mean reversion, rotational ranging activity to take place again. It's contingent on this level holding now. So my invalidation is somewhere back below here. And it might take maybe another day for this to transpire, but there's a high probability it does. Now, what I'm saying is sometimes it happens quickly. Sometimes you look at this right now and you think, well, should I get out of this? You're starting to look at it on the low time frames and maybe micromanage it, and you're thinking, well, it's not happening right away. Maybe I'm getting worried about it. Whereas now this has so far been a pretty cleanly defined area that I could say, maybe 1.5 hour ATR outside of here, I'm going to place a stop. My idea is, well, this might take a while, okay? And I'm fine with it doing that, but I'm not fine with it being down here, right? Because ultimately, when we're building a case for anything, we're saying things like this mean strength, things like, this mean not so much strength, right? Just kind of trying to point out high conviction price action versus low conviction ranging sort of choppy behavior. So if this is the move that you're building your case on, why the hell are you back within it? It's sort of like an advance and decline, right? This is the advance that we're using to make a case for strength. Well, this is ground you've covered. You don't want to give that back up. So if anything, maybe leave a stop outside of here. And if you are measuring this from the standpoint of RR, you could look at this as a favorable trade, right? Even with a very tight stop, you get more out of it. But I think that there's high probability you come back up to these highs. So just be mindful, though, that conditions up to this point have been choppy. And while it's hopeful to assume that that will change because we've had, a nice strong move, and the bid has shown up today. So I started looking at this platform again, and I was talking to the developer for a while, back and forth about it. I think that there's some things that could be improved on it, but this is, I think, a really good improvement. It's sort of like a running CVD. So the last 5-minute look back, the last 30-minute look back, the last hour, showing you the aggressor. And these are the spot exchanges. What I really like is now on my vertical screen, I put this to the left. And I got to tell you, I got a 50-inch or 49-inch huge curved Samsung monitor, which is beautiful. But there's something about the screen breakup that, for me, keeps things organized. And it always seems like you can't have enough screen space. So I put a couple other things on my vertical screen that are really just great to always have. Because without that, I think I'm always moving things over each other on this screen, which is a pain in the ass. So I need some kind of screen organization tool or whatever. But either way, so this morning, see, I just segue into weird shit. And you're seeing it right now. So look at the Coinbase spot bid currently. Now, one thing to focus on is You know, is this a spoof or is this actually the intention of getting filled? And what you can do is when you're looking at something like this and you have your aggro trade, right? Are we seeing, for example, you know, let's say you see, you know, that 10 on the bid, right? So, you know, that bid for 10 BTC, for example, right? And it's at, you know, let's say it's at the price it currently is, 58880. If I see that that is getting out of the way and sell orders are coming in and that's immediately stepping out of the way, then, you know, they clearly don't have the intention of getting filled. But if I see that this is refreshing and that there is, you know, let's say, for example, no, excuse me, imagine this, even better, it's because it's a little bit more surreptitious. Let's see that the bid is currently this, it's not that high, and it's at 58,870, right? And it's staying pretty low, but it's staying there and it's refreshing. And I see a bunch of activities transacted there. So let's say that I see that there's only a bid for 10 BTC, but shit, someone just sold 20 BTC and that stayed there. Well, I think that that clearly is, at that point, you know, it's very likely that that is some type of iceberg, right? Or some type of refreshing algo that's looking, you know, you have to think about Q priority. So, you know, in that case, it'd be difficult, probably an iceberg. But in that case, the intentions are clearly to pick up any activity versus, you know, you see someone at the bid here with a huge bid, the first small sell order comes in and they just step the fuck out of the way, right? So I think this is a really good platform. And you guys know me, I'm kind of a gear whore lately with all the new order flow platforms that come out. I want to find the best one, and I think EXO is probably going to take it, but I have to stick with Quantaro right now. All right, so BTC, I think we've done a decent job covering. So this looks good. Lower time frame trades, I think you're going to get a momentum move back up to that high 59, 59.6, 59.5. Things I am bullish on in the short term, things I've actually added positions on in recently as well. So I was in and out of DOT. I should have just stayed in this first trade that I shared on Twitter. In and out of DOT. I think that a lot of these, I think what you have to do is just bet on continuation in terms of similarity. So if you see that across the board, larger caps are putting in very similar corrective consolidation periods where you have things like SOL, where you have things like BNB, FTT, SRM, DOT, they're all doing they're putting in these very nice ranges that ultimately did have a test of the low, but immediately recovered. And this kind of pattern, you know, something that looks like this, I am most bullish on something when it does this. All right, when it breaks these lows, traps that activity, you know, causes half the market to puke there, and then recovers that. Immediately I look from here to here. Once we're trading back above the range, then I'm looking at continuation, right? So I think DOT, you can take a lesson from Sol, right? DOT has very clean structure. Sol has very clean structure. Don't get lost in the minutia of the fractals not being exactly the same. But on balance of probabilities, these high, you know, mega caps, not mega caps, but these large caps that have a big following and have a really strong use case behind them, right? There's really strong fundamentals, even though some of them are competing against each other, which is fine because, you know, you could place bets on all these horses in the beginning. I think that you could bet on correlation, right? So if we see Sol has resolved this way and we see, you know, XYZ coin that has similar patterns resolved that way, and we're looking at DOT, you know, what's the probability that DOT does something similar? Well, so far, if we're going to be betting on evidence, you know, the evidence is in favor of this continuing, I'd say in the short term, because you're having this retest that is quite successful so far, right? You're getting a good amount of selling here. And if we're looking at DOT footprint, I'm sure that, you know, you would see that there's clear signs of absorption. I think that the invalidation is nice with this because if you're back below this level, if you're back below anywhere below this low, below 40, then yeah, you're probably going to come back within this range and maybe have one more rotation towards the low. Who knows? But at least it's a nice asymmetric trade at this point. You know, if we look at Sol post-expansion retest, it's up. Now it's up 30%. If we look at DOT post-expansion retest, you know, we are only 2% away. Now, not to say it's that simple, and you could say, you know, it's always going to be a leader and laggard effect, and this is guaranteed to go another 30%. I think that DOT's going over 50. So if I have high confidence and high conviction in this being over 50, and we're close right now to a really nice level that we could define risk into a short-term trade, well, then I'm definitely taking this, right? Algo, I think, is a similar looking, it's similar structure in terms of the level of attractiveness that you have in this retest. Obviously not price discovery above the all-time high, but it's price discovery nevertheless, and it's showing successful retests of a good technical level. Good technical level being, if we just look at the weekly level and the daily levels, we are still within what is a higher time frame weekly range. But I think if you're going to bet on how this would resolve, test of these lows multiple times, but now you have a pretty key level on the daily that is showing a nice clean flip. So you're not through this weekly level yet, but ultimately with expansion, that weekly level would be going. And I would say that if you're going to be taking a short-term trade, or I know myself, this is for the position I recently just got into, I think that this is a good enough way of defining a position. Right? I don't want to be back below this low, so I don't want to be back below 125, 120. This is weekly resistance, but I think that this is, maybe it's a matter of time. It could chop through and grind its way up, sort of like alpha. I think that this is a nice clean sign right here alone, right between these levels. All right, just this key area that had supported us, rejected us, all right, and now is showing that it is acting as a good support. I think that's a good area to find a position. So I think algo looks really good. I'm in an algo position. I think alpha still looks good. Frustrating this morning. Had a nice move up. I was in position and now completely, almost retraced the entirety of the move. Now the problem with alts is you can't add too much weight to this because it's done this the entire time. You have to focus on a high time frame. Alts are thinner. It doesn't take too much to move the market. So you have to really make sure that I think that the integrity of the structure as a whole is maintained. So with alpha, another thing about alpha is there's a lot of intelligent people and big people within the space that are bullish on alpha in the long term. And I think that you have been able to follow these people consistently for some time. I don't know if their time is up in terms of their performance, but I think that alpha is probably going to be, it's going to be over $3 within the next couple months. So take from that what you will. I'm in an alpha position. I think that this is clean, even though it's choppy. I think it's clean. And if anything, maybe this is some sort of vertical accumulation pattern. I mean, with alpha, where it's very obvious is where it's also late. And, you're not going to be late, but the benefit of getting in early for me over here as it's respecting this structure is that if I use this weekly level as a reference point, it's likely that we still come back down here anyway, even if we break above here. Like we get a break above. How many times have we seen a level like this with an alt? You get the big move up. Everyone's like, yeah, it's so clear now. And then you get a really scary wipeout to throw into an off that still comes all the way back down. So be mindful of that, right? If you're buying in price discovery above this weekly level, you could be due for a nasty shakeout. ETH looking really attractive, holding this high. I think that this speaks to the strength of the market right now. I would have been very worried. So one other thing that, I was a little bit iffy the other day too, because we didn't have ETH really standing on its own legs yet, was, ETH put in a high and then is struggling over here. And all I'm thinking is, well, if it's doing this, then we're all fucked across the market. Because this is now gaining a lot of exposure and gaining a lot of, increasing the confidence of a lot of traders in DeFi and alts and sort of looking at it as proxy for BTC, maybe taking the lead from here. If it fails here, well then shit. It's been kind of wishy-washy lately anyway. Maybe the thing has to pull back more as a whole, meaning broader market. So the fact that ETH is now just doing exactly what you would want it to do, chopping around momentarily, but it looks like it's going to be putting in a nice expansion to the upside soon. I think that this is a good proxy to use for the rest of the market. As long as ETH is holding above 19, I think that we're good to go. And just to give you some clear daily levels, we've exceeded all daily levels now, chopping above the highest daily close. But, this looks, like I said, it looks like it's about to put in another leg, honestly. GRT. I think the GRT, I'm going to look at the chat in a second, make sure I didn't lose you guys. GRT actually looks good. I do think GRT looks good. I don't know I don't know a whole lot about GRT. I was in a couple GRT positions earlier in the cycle, but this is a really clean structure on the weekly. I think that the best thing about it is, hey, even if you're not confident, The best thing about really tight consolidations, and I think that it's probably a better idea to indicate this consolidation more than anything. 1 second. Let me just change that. I don't want it to be, well, it doesn't matter, honestly. Where is it, though? If I wanted to change it, where's my option? There we go. So style, 1 sec, and make this red. I think that this is a really nice structure because, not because I know it's going to break up or anything, but because it's so tight. You know, we're talking about the last, let's see, the last 1, 2, 3, 4, 5 weeks, over a month, we've had a 14% range in an alt that's new. So I think that's a sign of strength. And then even if it's not, right, even if you're like, you know, fuck you, you don't know what you're talking about. This has been an area that has obviously confined the market. This is the key level, right? This level we've never closed above. This is a key contextual level and a major inflection point. So if we're back above, you know, if you're above $2 with this and you're holding your ground, I would look at this being the move that would lead to expansion. And after this tightening of volatility, you could expect that after 5 weeks of compression, it's going to lead to a decent expansion. So I think you'd at least be looking up to these highs, back up to 250 level, which leaves you, you know, a nice 30% move. I think that, you know, like I say many times, this might be an alt that might be worth holding, though, right? Sign of strength like this early. This just looks, you know, because it's such a clean structure, it's a nice structure to say, you know, hey, if anything, you know, your stop can be back down below here because shit, if you're above here and then back below here, well, then things don't look good. But a nice clean structure at that. LTC. Ooh, I didn't even notice that. That happened during stream. I am going to be longing this. Swing trade. So a nice swing trade. Place some bids outside of here. Maybe get a little bit more of a fill. But I don't think, you know, regardless of what your opinion is on LTC and it being kind of an antique, this is clean. And there's a lot of people that are the same with XRP. You think it's dead, but you know, it could have some legs in it. There are people in payment platforms that use LTC, so hey, it's got a fundamental use case right there, right? It has some utility. This is a very clean volatility funnel, right? This is a tightening of volatility, and after this kind of tightening, and it has resolved, I'd say at the perfect time, you want to see that it ends about a third of the way. So before it gets all the way up to beyond 3/4 of the way towards the point. So if we were looking at this being the beginning and potentially if you were to extrapolate this forward, this being the point, you want to see that it's 1, 2, 3/3 of the way it starts resolving. Otherwise, if this was going to be bullish, you know, if you start getting to the point, I think that it makes it less bullish at that point. You're going to see a lot of people talk about that 3/4 rule. So the fact that this is resolving sooner, I think that you could expect maybe a measured move. So a measured move, sort of like the open of the funnel, 59%. Measured move being more or less 1-for-1 with that. So who knows, maybe $300 LTC is coming to a channel near you. This looks really good though. LTC, don't sleep on LTC. Ren as well. So my buddy Kilgore pointed this out. So the thing about Ren is you have one of these kind of blow-offs. This does look like the beginning of a blow-off top, right? Big volatile move, but it is an alt. So your norms for alts and BTC can't be the same, obviously. So if you get, like I said, you know, if you're at a 25 to 35% pullback zone in BTC, I'm not giving you financial advice. None of this in this video is financial advice, but probably a better time to sell will come after that, right? You probably can get away with walking away for a little bit, and the market will have some mean reversion. You probably get out at a less suboptimal level, right? A more optimal exit point. With alts, you could have pullbacks of 50%, and you think that would be the point to write it off, and then it's up another 100% a week later. So more importantly, with Ren, I think that you have this area down here, which was your higher time frame support. Then you have this brief loss of it, and then immediately it's sort of like we have another clean reacceptance and retest of that level. So I think that just speaks to strength, right? And in terms of flagging on a high time frame, one thing is, as I said earlier, a structure like this that takes out the low, you have a bearish break and then reclaims it, this becomes sort of like a trap, right? What that is that the last puke a lot of times before continuation. So the fact that we're able to hold above that daily level, which is also the weekly swing level right here, which is around, it's pretty clean, it's around $1. I think that what this means is at least you're getting a move back up to what is before expansion, right before this big standard deviation move, what has been like the tighter range within that period, after that period, excuse me. I think you can get a move back up to around 130. And then, like all others, what is this likely to do? Continue beyond that, or suddenly have a major pullback? I think you're getting a continuation out of these. XRP, last thing, and then I'll look at some of the comments in the chat. This is a lesson, right? Because XRP is kind of the joke of crypto for a really long time, but the technicals aren't. Okay, so right now XRP is in price discovery, in a place that has not had price discovery or experienced price discovery since September of 2018, right? And before that, so going back to 2017. So you can't deny that, right? Cannot deny that. So now above key weekly structure, key daily structure. So for example, a structure that this clean, the benefit of it is, I think it's by default something you have to have a bullish bias on from here, right? As long as it holds this, I would say 55 level. So back, if it falls back below within this range, then I think, yeah, you're probably coming down back around 40 again, and maybe you'll start ranging again. But right now, a big change in market structure. So key inflection point, major contextual level, kind of a level that no people can deny, all traders of all time frames can acknowledge, is back above these daily and weekly levels. So we haven't been able to put in a higher daily close since going back all the way to, you're going back to June 2018. So this is by all means a major change. And what this is, honestly, is even if the market wasn't short directionally, a lot of people sidelined because XRP was delisted from so many exchanges. So what you can think about this is this is just an example of what happens when people are fearful. And this happens in traditional markets for the entirety of traditional markets, right? It's the S&P. The story of the S&P is people getting sidelined, only for it to just grind up, for in eternity, it seems like. So XRP, with regard to the SEC and all the drama going on back and forth and all the exchange delistings, people were actually forced to give up positions in some cases, right? Unless you were going to be transferring it to a cold wallet. A lot of traders just got out of position. So what this did was create a large amount of sideline participants that would potentially act as buying power in the future when things changed. And for example, this right now, even though it's put in this big move, I think that there's a lot of sidelined activity that might chase this up even further. So yeah, actually, in the short term, bullish on XRP as long as it holds this, I would say this 60 level, right? I mean, if we're going to say what level can we all agree is a very important level on a weekly closing basis, I'd say it's anywhere between 59 and 60 level. So on a weekly basis, you don't want to see us back below there. So I think there's probably a lot of great short-term opportunities though trading this. The XRP is great to trade, honestly. So even if you didn't believe in it long term, or I don't believe in it long term whatsoever, you could still get plenty of great trades out of it. Let me just go to the chat. Okay. So the dude says, "What the hell is wrong with you? You're just spinning around with your words all over again and again. You said so times all over again. I guess English is your second language, so maybe I don't know. Maybe I did repeat myself a lot, but can't help it. I'm a human being." Okay, Nasi Video X, man, some of these viewers are rude. Thank you for showing us your process code. Yeah, it's all good. Some of them don't know what they're doing anyway, so. XRP caught bow. Yeah, XRP looks actually really good. Shroom. Something happened on Jason's network 300% in a week. Is that are you joking right now? Or is that TRX? Ooh, wow. Well, the last 2 weeks it's up 129%. The market right now is kind of a rising tide moment. So everything, if it has a setup and it's retesting support, I think that you have kind of a green light until there's any kind of major change in market structure by BTC and ETH. You could kind of use them as proxy. Does anyone have any questions? Any other things you want me to look at? Let's see. The dude, do you have any questions? I'm assuming you're normally on a maybe a little bit more basic YouTube channel where they just talk about entry, stop loss, and target based on daily market structure and a moving average. So I apologize if this is a little bit outside of your learning curve, but you know, if you want to actually start making money, you might have to learn a little bit more than that. Yeah, I'll check on sushi for sure. Yeah, sushi is honestly pretty frustrating, I would say, because for the level of bullishness across the market on this, it actually looks like it has the ugliest pullback. So if this was a bullish pullback, I would expect this to be inverted, right? Where you have really clean rejections off of tests of the lows, something like that. But meanwhile, what this looks like is sort of like a bearish continuation flag, right? Yeah, your first two advances are, you know, your second advance upward after this first pullback, which is always, you're always going to expect that to have a rejection because it's mean reversion right after a big dump. You know, we're at support that was higher time frame support for this gross grind. But you know, you have a lower high right after that, and this kind of looks like it's spending a lot of time at support versus, like I said, if it did something like this and it was the other way around. You know, you've seen many times a pullback like it's almost like the pullback we're seeing with BTC. Something like this is different than something that has been, you know, rejected very quickly and is lower, right? Rather than us having equal highs and maybe one higher low and at one of these lows. This just looks ugly. It kind of, you know, like I said, it looks like a kind of looks like a bear flag, which, you know, breaks down, leads to continuation. I don't know. You know, I don't know. It could be a biggest, it could be a huge psyop, and it's an effort by whales to shake people out. It hasn't. Maybe it's because so many people already are long sushi, right? So the market could be very crowded. It was a, you know, super bullish for a really long time. So maybe it takes some working out. I mean, I would say, like, honestly, for, you know, now this is your, so this is your weekly low. So now we've been, yeah, this is the last 3 weeks. I mean, all hanging out around here. But the weekly higher low before that, you can see that's kind of where we're sitting at support. So the weekly higher low before that was right at 15. So in terms of market structure, it's not changing and making any lower lows yet, right? This is the higher low right here. And that's where we're, you know, finding support. So I can't get bearish on sushi without losing that, right? It's just chopping around a lot. Again, it's taking longer to work out, but it's less bullish than everything else is right now. I checked that alpha, so maybe you want to rewind a little bit. Yeah, so Ren is bullish on the daily. I said Ren is bullish. I'm bullish on Ren. Or do you mean a lower high in the daily? I don't know what are you talking about this lower low right here? I'm bullish on Ren. If you look at Ren right here, so you have this daily low that now we're back within. The weekly low we're back within. Daily structure, again, like I was saying earlier, this was the lows of this whole consolidation. This was the attempt at continuation down. This is support now found back above this level. So I think that Ren is bullish. Okay. Look at HTR. Yeah, I'll look at HTR real quick. Qcoin, nice. So just daily and weekly structure. Just map out the weekly range. How about that? I don't know if you could call this a higher low right here. This is, I would say this is more like your daily high or low. So lower high right here though. This looks like it looks like it's about to, it looks like it's flagging almost, right? It kind of looks like, as I said, they have this compression of volatility in LTC and in a lot of pairs where it's not as clean as higher highs and higher lows. The consolidation is not as clean as equal highs and equal lows, but you do have what is the sign of maybe a continuation pattern in the making, and it's a compression at least. It's not very clean, but it is there. Let me get this box away so it's a little not as messy. Come on. One sec. I don't know anything about this though, and that is a really odd level. Like, who is sitting on the ask right there? Very odd price action. That looks like if you had absorption in price action and you could only look at price action alone, excuse me, if you only could look at price action to see absorption, that's what it looks like. I don't know. Like I said, the only thing you could say off of this if you're trying to make a bullish case is that it is painting some sort of a pennant, and outside of this you have a more clear case. I went over Ren. Oh, okay, so Andre, you did say lower high and lower lows. Yeah. But the point is that it's recovering. So if you look at Ren again, lower low, so lower high is correct. But what, we can't, so the thing is we can't just wait for higher highs and higher lows to start longing things, right? If you're going to be a trader and you're waiting that long, you're missing out on a ton of activity. So what you want to look for is the signs that it's beginning to shift. So, when you have a series of lower low, lower high, well, you start looking at previous highs and previous lows, right, to start placing your judgment off of. So, for example, let's say that this is your recent lower high and lower low. So something that does this and is starting to reclaim those levels on the daily is starting to show that it's making a transition, right? Because you can't just say, if an asset begins to make lower highs and lower lows on the daily, that it's going to go down, forever. No, it's going to go down until it shows signs that it's stopping in its progress downward. So this is the first sign, right, that we're not continuously breaking market structure. And if this was something like this and you were respecting that low, it would be a different case. But now we're kind of getting reaccepted back within that low. So it's a sign of maybe a shift. And you have to look for those signs. Otherwise, you take late trades. How do you personally go about trading coins like BNB with any size in the US? So, Chris, I don't know if you work for the IRS or the SEC or... from what I've heard, people use VPNs and they use their withdrawal limits. From what I've heard also, Binance has a really liberal and accommodating withdrawal limit for non-VPN traders. I think it's 2 BTC a day. So that's $120,000, around $120,000 a day withdrawal. So, I mean, yeah, that's why, that's like a really friendly withdrawal limit. Like, I don't know how that stops anti-money laundering, because you could just continue to move 100K, 100K, 100K. But anyway, I don't know anyone who trades on Binance US. Yeah, I did go over ETH, but I'll take a look at it here again, and then we'll wrap it up. Yeah, Chad, I did pull out Array. I think I went over that a couple times in earlier streams. I did, and I was saying how I was originally going off of Sol and SRM earlier in the structure to see if it would follow through similarly to how they did, and considering current environment, whether or not they would have those tailwinds for Ray. And then when BTC had trouble, it put a pause on everything, and Ray looks like it needs to go through a longer accumulation period, similar to how SRM and Sol did in the beginning too. SRM and Sol in the beginning, similar to Ray, it was like you had this sort of like where Ray is kind of like at this point in terms of the timeline, but in Sol and SRM, you had this move, pull back, opening, right? No major structure established, and then it went to range and have a new accumulation period. Let me back out because I didn't mean to do that. For a really long period of time. I think SRM is a better example. I think it looked a little bit more similar to Ray. Yeah. So you're all bullish back here thinking it's just going to keep continuing. But there's so many new people that got in late. There's new people who have the best cost. There's people who got in early that have a ridiculous cost basis that can sell up here. They can sell up here and they're still tremendously in profit. So you have a lot of sell pressure you have to work out in new assets from people that are late, right? And that cycle of, you know, the euthanasia roller coaster, them getting out of break even after they get in late. And then you have people that got in early that you don't even know, right? People that got in late but early still. And their cost base is still that, you know, they could take profit, and it doesn't matter if they take profit at the lows over here if they got in very early. So you have a lot of sell pressure in the beginning. And I think Ray's kind of in that similar spot. So I don't expect Ray to just take off. It's not the perfect time for it to do that. Yeah, I'll look at Shroom real quick and then I'll wrap it up. Yeah, the graph, like I said, I went over graph. I think that looks good. Yeah, I'll look at CRV and then I'll look at Shroom and we'll wrap it up, guys. Let me just go to my DeFi list. So CRV comp recently looking good. Honestly, I think, and CRV and what else? Cake, similar charts. So Cake, CRV, but Cake on the daily, CRV on the weekly. So similar structure. So if you look at Cake, if you look at CRV on the daily, excuse me, CRV on the weekly, all right, Cake on the daily, clean structure, retest of that level. This will probably take some time to work out, but I think that these are good continuation plays. But getting to CRV, because you asked specifically about that, I think that this is your first major consolidation after a huge weekly leg. And as long as this maintains structure and we don't start trading back below that 175 level, just look at how it's, so just look at the strength of it right now. So here's a weekly weekly swing high. We'll label that. So weekly swing high right here. If we look at this on the daily now, what is it doing, right? Did it come back up here vertically and get rejected, or are we grinding against resistance now? This, I think, similar to what alpha looks like. These slow grinds up, they might be choppy, might suck because you constantly think you're getting in on the retest that leads to the bigger move, but then it retests. You know, what it keeps doing is, it's sort of like what Link did for a couple months. It retests a level, pops up, and then retests this level, and then pops up, and then retests this level. And you're overthinking this the entire time, and you could be in and out, and then you look back a month later, and you realize that it did that over a long period of time, but it moved up the entire time. So I think CRV looks good, honestly. It looks like it's grinding against the only resistance it has, putting in a series of higher highs and higher lows. So looks good. Looks very good. And then Shroom, last thing, last but not least. Take a look at Shroom. Shroom had a big pullback recently, but you always sell the news. The only news that you don't sell is news that's breaking news. But you always sell the news. So that's what people did, because they knew about what was going to be released, right? So they're getting long into the event. Why would it go up after the news, right? Everyone knew what the news was going to be, that there would be news. So the problem is when people don't know exactly what the news is, but they know news is coming, it sets up their expectations to a certain degree. If something doesn't exceed their expectations, if something is maybe on par with their expectations, or if something is different, those are all actually reasons that you would say, okay, yeah, I got long into this. Now what's the market going to get long into after this, right? Everyone got long into this event. You know, the market is very long, right? There's a lot of sellers in the market. So no matter what it is, okay, you can't, and hopefully what you can take from this, maybe the dude can learn something during the stream, is that it doesn't matter what asset it is. When you're in something, you're going to glamorize it and glorify it and say like, no, not my asset. It's not going to sell off on the news. It's going to, okay? When everyone knows what's coming, even if they don't know the details of it, they know something is coming, right? They're getting long into that. Like I said, unless it's breaking news, a fundamental, release, Fed announcement, no one expected, Powell's like, got to talk tomorrow, didn't plan on it, but have a major announcement, things like that, or major, news catalyst that is macro related, some kind of fucking war, or, you could think, earthquake in Manhattan, whatever, knock on wood, because I'm really close. So yeah, the market got very long into this. Now, Shroom, in terms of the project, there's a lot of things coming down the pipeline. As a reminder, with alts, they're very thin. Someone can ape into it. They can ape out of this out of fear, drop the market 50%. They ape back in, and the market's back up another 50%. Even though it'd have to be up 100 from here to recover if you bought up here. So, I mean, this. I'm not too concerned about it. They're releasing a DEX, they're releasing a bunch of other things, they rebranded. Um, but at the same time, like I do know that there's a lot of things that have a ton of promise, and even I know, even in my own investments, there's always a degree of uncertainty and risk that you have to account for. So I wouldn't be too worried about it. Um, it's hard to say. On that note, it's hard to say when to be too worried about some of these lower caps because, like I said, I mean, you want to try to get in around really good, favorable places to define risk. Um, but sometimes you could really miss the boat by waiting a little bit, right? You say, okay, the market's in a gap, it's going to fall a little bit lower. Market is below a higher time frame low within this range, right? This range rather. Oh, we have to come back down here to 40 because that's what structure is telling us. But you wait for that, and then it could only be a matter of a couple days for this to completely recover. It could be a matter of just a couple buys for this to completely recover. So with the small caps, I do think that you want to have good structure, but I think you have to have high conviction in what you're getting in, and that other people will, and will get behind the bandwagon when there's any kind of development. But as a reminder, everyone sells the news. That's what always happens. Okay, markets price things in. All right, guys. Quake in Manhattan, get your badge, Joe. No, I was just joking. Knock on all the wood. Knock on the wood. All right, guys. I think that's gonna cover it. I want to thank you guys again on behalf of our sponsor, Phemex. And I'm always featuring this because I think they're phenomenal. So GVol, check out their YouTube too. If you want to learn more about all of the stuff that they have on their platform, go to Genesis Volatility, their YouTube page. It's all free. So everyone's learning about options now. I think that you definitely should because I think you'll have a leg up. I think options are where the smart money is. It's not where all of the liquidity is yet, but it's definitely going to. I think it's going to shape up to be the largest derivatives market, similar to traditional markets as well. All right, and that covers it. Everyone have a fantastic evening. I will talk to you soon.